Good morning, good evening, good afternoon, traders. Steve here at Logic FX Trading, and welcome to Daily FX Analysis. Okay, guys, we've got Christmas and New Year out of the way. Obviously, I was on the computer every day, but with such low volumes and days where markets were closed, etc., I just decided to have my holiday, keep an eye on my own investments, and then come back at it at today. So we're Monday, the 3rd of January 2022. Let's hope 2022 is a lot better than 2021 so far as the world economy and the world health situation is concerned, guys. I do see headwinds this year. Obviously, they're all out there. Inflation, we've got interest rate hikes on the way. We've got the Fed and other national banks cutting back on their spending program, their quantitative easing, as it were. So there are headwinds, particularly for stocks. Obviously, these things don't particularly affect currencies other than they provide opportunities either to push a certain currency or trade a certain currency long or short, depending on what's happening in the individual economies of those individual countries. So, despite the fact that most of my trading is now in stocks, there is still a case for looking for opportunities in currencies. And therefore, I'm going to continue to do this currency analysis, probably not on a daily basis, guys, because it does take up a good couple of hours of every morning for me. I'll probably do it once a week. And then if there's anything, specifically that jumps out, then I'll do maybe a little 5-minute video on that on a particular day. And then obviously let you all know that I've published that video. Going forward, I'm going to focus more on stocks and valuations, etc., and we'll take it from there, guys. But I will still be looking at currencies because there are opportunities there, and if you take 5 or 10% of your account, of my account, I'll say. What you guys do is up to you, obviously, but I'm going to take maybe 5-10% of the account, and on an ongoing basis, we'll use that to trade currencies, particularly if we hit headwinds with the investments, as it were. In other words, I'll be trading currencies and investing in stocks, all within the same account, guys. So, without further ado, let's get on with it. Happy New Year to everyone. Let's just start with yesterday. Obviously, everything was closed. Yesterday was Sunday, and it was the 2nd of January. Today, we have market manufacturing PMI. I think it's still a holiday here in the UK and many other countries. Not sure about America. They're not that big on public holidays. They have different public holidays to Europe. Manufacturing PMI final in the United States, and then we'll just go ahead and do the next 7 days. January 4th, tomorrow, inflation, unemployment in Europe. Well, that's specifically France. And then ISM manufacturing in the United States. Nothing too much to look at there. We'll discuss what I think of each individual currency in a moment. And then on the 5th, we have Reserve Bank of Australia chart pack, which I don't know what that is, but I will find out. We have Italian inflation rate and FOMC minutes. Inflation rate in Germany, Canada balance of trade, ISM non-manufacturing PMI in the United States. And then on the 7th, which is in the next week, I'm pretty sure. Let me just check. No, of course, 3 plus 4 is 7. So Friday, core inflation rate, Canada employment and unemployment in the United States, non-farm payrolls and unemployment rate. That's probably the biggest bit of information of the week, guys. So not every week gives us something huge to look at, but this one will probably be something that may or may not move the dollar. depending on what the figures are and depending what else we can determine between now and the end of the week. So over to the charts, and we'll just start with the yen as we have been doing the last few months. We're on the 4 hours here, guys, 4 hour time scale. If you go back a few months ago when we were in here, we basically determined that it was a running flat and we would then extend down. Possibly, remember, it's all probabilities, guys. There's nothing definite in Elliott wave in technical analysis. Possibly come down into that region, guys. We had the initial move down. Then we ran flat for a little bit of a while, mainly because the stock markets were running flat, running out of steam, and money was looking for somewhere safer to go, but not enough to push it long, as we, so far anyway. So while we were going through here, we were kind of in a situation, we said, well, is this the bottom? And we start to go long from here. And then we kind of got to the stage where we said, no, we think we're going to get a bit more downside. So that would be my target for the yen over the next few weeks. And if that changes, obviously we'll discuss it. But for now, I would say there's more downside to the yen. Dollar, what I think will happen with the dollar is over the next few months, we'll get a push on up. Maybe it'll come up to there. And then as Europe starts to feel the pinch of inflation and maybe starts to actually do something about it, ECB so far is keeping their powder dry. But as they start to do something about that, or even there's a sniff that they're going to start to do something about it, remember the market always moves before news, we'll start to see this dropping off. Maybe not as dramatically as that, guys, but we'll see it at least running flat up here and starting to move in that direction. So between now and then, I think we have a move up on the higher time scale. Now, what does that mean? On an hour by hour or day by day time scale? Well, there could still be a bit more downside here. Do you remember we put this in? Where we basically said we had that, and we're looking for a zigzag, remember? And then we pulled that over and said, well, you could well get a move down into there, maybe a C wave that would bring it a little bit lower and break that before we get our next move up. Well, obviously, you plan these things out. They don't happen in a straight line. They don't happen the moment you think they're going to happen. But so often they do happen, guys, if you have the patience to wait. And here we have it. It's come down. Then there's that move. Everybody thought, oh, here we go. And bump, 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 bump. Down it comes in a nice little dag. And all of you are in that on a 1 hour time scale. You may well even see impulses and what have you in there, guys. We don't have time for that on these overviews or reviews. So I suspect it'll break that bottom, guys. It doesn't have to, but I suspect it will. And to give us a move back down into this, and then we'll start to push long again. Now, today's the first day. We've got to get our heads to the ground, find out what's happening, listen to the news, and then determine whether that's on the cards or whether it's going to move long from here. I think the next move's long, guys, on a higher time scale, but we could well see a little bit more downside there. So keeping that in mind, then that would mean more of the same here. In other words, this could push up a little bit before we get that. The pound kind of surprised me a bit, guys, in that it's been a little bit more impulsive than I would have expected across the board, actually. If you consider that's what happened with the euro, and then there's what happened in that same time scale, there's what happened with the pound. This is because the UK increases interest rates. But there was a lot of doubt at the time. Was this the interest rate decision in here somewhere, guys? Let's just keep an eye on it over the next few days and then determine whether we can you know, decide which direction the pound's going in, guys. But there could be a bit more upside to it. And then from a point of view of the dollar, as the dollar starts to go long, we could see something in here. You would at least be looking for a correction in here anyway, even if the trend was long. But remember, we're looking to trade with trend. Look at how this trend's been moving. Is that the bottom? Well, that's the thing we don't know, guys. Look at how this has moved. This is coming down in a zigzag, guys. Back up, could be one more down. And then maybe we start to see the dollar shorting on the higher time scale. Aussie, same thing. That's what we're looking for, guys. We're up in there. Is this the point where it starts to turn and drop? And there could be a little bit more upside, but that would be what I'd be looking for. Do you remember we copied this, folks? Remember that? Can't remember where we copied it from, but we put that on when we had this. I said, listen, we're looking for something like that, which is basically a zigzag correction after an impulse. And what do you look for after that? Well, you look for the next one, the next leg down. Which I don't know if it's going to come that far or not, guys. I don't want to over exaggerate that, but maybe it comes down, gives us a double bottom there before starting to come long as the dollar comes off. Maybe that's too soon. Maybe there is a bit more downside of this before the dollar comes along. New Zealand USD, same thing, guys. Obviously here we were looking for it to break short. But it's the same story, guys. Correction, and it's reflected in DXY, particularly for anyone that's new or anyone that's trying to learn Elliott wave or learn how to do a bit of technical analysis. That is what is reflected. Remember, the US dollars on that side in these pairs, and it's on that side in those pairs. So once you come over here, then that same thing is reflected here. Let me just make sure I've got that correct, guys. Because that corrective structure was from 25th of November. And let's come over to the CAD. Where would 25th of November be? 25th of November's there. So it's represented by that, which looks a little bit strange. But remember, there's two sides to every currency. So what are we looking for in this? Well, I see more upside to oil, and obviously there's more to the CAD than oil, but oil does, push the CAD long. So this is the oil price. This is what we were looking for. We did get that, but remember, we are where we pointed the arrow to. This is where you've got to be brave, guys. And obviously put stop losses in where appropriate. In other words, if that had dropped and broken that, then this analysis would have been wrong. We've had a pull back up. I suspect there's more upside to it. Main reason being that this is off the top of my head without the latest analysis, guys. But off the top of my head, we're getting into the winter. And the oil demand always goes up in the northern hemisphere in the winter. The majority of industry in the world is in the northern hemisphere, so just on that alone, I can see further upside to the CAD, and that's to the oil price, which will then push the CAD strong. But how much more downside there is to this, I'm not sure. I certainly wouldn't try to trade it short for now. There could be a little bit more, and then we'll look for that push up in the dollar. I'm not convinced by this one, guys, because of that. Looking for the CAD to strengthen up. There will be better trades. US Swiss, well, we drew that a while back, at least there. So now I'm going to take the alarm. line, put it around here, and we're now looking for this to start going long. Doesn't mean it's going to happen today, guys. It could be a few more days of downside. But as that alarm goes off, I'll start thinking about, do we trade this back up? Yes, remember, you're only looking for one or two good trades, guys, in any particular period of time, depending on what time scale you're trading on. So that's what we're doing. We're scanning, we're looking. It's the same thing you do for companies, guys. You don't just see someone's recommendation on a company and jump into it. You scan and you scan and you look and you look at the fundamentals, and then you make a choice and you pick a particular stock to get into. It's the same with this, guys. You're not necessarily jumping into it all the time. You're looking for something that's blatantly obvious, and then that's when you risk your money. US Swedish krona, same structure, potentially looking for a little bit more down there to break that bottom before we go long. US yen. What I was looking for here, guys, was that zigzag to complete, because when you get something like that, so often you'll get that. And what I said back there was, that would be the ideal place to try and trade that long. But the trade was long, not short. For anyone that's picking me up new or the first come here, when we do that, that's the zone, that's the area to start thinking about trading it in the opposite direction. And of course, if you get me drawing something like that, then that's the zone to start thinking about looking for a turn, and it goes. So if you were up here, as I said, guys, be careful about trading that long, which was the wrong thing to do. But you need a system, guys, and if you trade your system over and over again, you'll get it right far more often than you get it wrong. So an individual situation where you haven't, caught that particular bus, don't run down the road after the bus. Don't lament that you missed it. There'll be another one along in 5 minutes or 10 minutes, guys. In other words, there are loads of trades. So what do you think about this now? Well, clearly it's going to continue to go long, but how do you get into it? My problem is that I don't like getting involved where you have a double top situation, because so often price will come off it. So if it were to come off, that would be the place to think about trading it. Is that going to happen? I don't know. If that doesn't happen, guys, you wait for the breakout, then you look for a setup, and then you try and trade it longer. Now, I'm not suggesting of that line in there at the moment. I've no idea what that line represents or why I put it in. Can't remember. But I'll pick up on that over the next few days, and we'll get ourselves a target in there. Gold. Will gold become a bit of a under normal circumstances, gold should start going long from this point on, guys, as the headwinds gather. All the enthusiasm, the positive sentiment about equities, not all of it, but a lot of it is dying off. And there is a rotation either within within the stocks. In other words, you're moving from one sector into another, from growth stocks into defensives, etc. But some money may rotate into safety, and that money that rotates into safety could well end up here in gold. The reason that I'm a little bit reticent about it is that gold hasn't necessarily been behaving the way that we would have expected it to in past years. And but having said that, this shutting the whole world economy down and then starting it up again isn't something that's ever happened before. So we're all in a learning curve here, guys. And also we have cryptocurrencies, and particularly Bitcoin out there. And how much of the money that would have gone into gold is now going into cryptocurrency. So do I think there's upside to gold? Yes, I do. Do I think it's a good hedge? I'm not entirely sure. but I will keep looking at it because, oh, hold on, what am I doing here? Oh, it's that one I want to get rid of. Because I didn't buy into gold, guys. What I bought into was gold mining shares. So you're buying into a company that's profitability in part depends on the gold price. And no matter how badly a gold mine's managed, if the gold price goes up, the profits will go up, guys. Generally speaking, obviously you get into particulars of that, but that's not what we're here for. So from that point of view, I'm not in gold, but I am in a few gold mine shares, guys. And silver, I have a silver ETF, which is at the moment making a push up. What we had said was just roughly looking at Elliott here and saying this is an A B, and if this is a C, a diagonal, it should break A, which is the bottom of A, which would be here. So I was looking for this to come a little bit further down to see the circle there, guys. Now we're on a daily time scale here. That's why that circle's so small, because it was probably drawn in the 1 hour time scale. So that would have been the ideal place for me to think about buying silver, down around the $20 mark. Hasn't quite done that yet. It's pushed up. It's around $23 at the minute, guys. But it wouldn't be a bad place to buy it if you were looking for a hedge, because it could at least get to there and possibly push on up. As we run into headwinds, but remember, you're not necessarily banned at trade. You're banned as a balance of, against the stock markets correcting deeper, guys. That I'm not expecting stock market crash, but we could certainly get a year of downward correction, which isn't going to be much fun unless we can find other things to play with, which is one of the reasons why I decided to continue looking at these charts, guys, because I did have a thought process through last year that it would eventually stop trading currencies. And that was a bit short-termist on my behalf, because one of the reasons I had been trading currencies was going back a lot of years. The stock market wasn't necessarily the best place or the most exciting place to trade. Last year and the year before were incredibly exciting in the stock market, but I don't think this year is going to be. And therefore, remember, it's not all about excitement, but you really want to be trading something, guys. If you're like me, Bitcoin. I've drawn this in Bitcoin, guys, because I do think there's upside to it. What I had been talking about earlier, and I don't know if this is going to, turn out or not. Basically, I think I copied that. Was it that? I copied the last. It was something in there. Yeah, that was it there, and then just expanded out to make it fit. Does that mean it's going to move exactly like that? No, it's just to give us an idea of what could possibly happen. And why would that happen? Well, the reason that could happen is if people are looking for a safe haven, and enough, this has been around long enough for institutions to kind of start to think they don't want to miss out on it. There's a lot of people having doubts about gold the same way that I am. And therefore you could see another leg up in this Bitcoin story. Can it drop further? It certainly can. It has done in the past. It could drop, we had this drawn out the other day, guys. I can't exactly remember what it was. Yeah, let's not do that. Let's push this, pull this back into here, guys. So there's what I'm looking for. That's the structure I'm looking for. So what happens if you buy in here and it turns out that that's wrong? Well, it means that it's going to drop. So you don't put your full allocation in there, guys. Add a little bit there, a little bit more there, and then you've got, if you're wrong, then you've got to hold on, because I do believe that it will come back up. I do believe that it will break that. I do believe it will go higher. Now, I've been looking a little bit more into Bitcoin over the last couple of weeks, and I'm no expert in it, guys, but from what I've picked up from other people and their explanations, I am now becoming a bit more convinced of Bitcoin, that it will be around in the future, not as a currency, guys, but certainly as a store of value. And this isn't the place to discuss that any further, but just putting that out there. And I think this is more what I've been saying for Ethereum was what I've been saying for Bitcoin. In other words, it could come down into that zone there, guys, before pushing long. That's why I'm saying, if you get involved there, don't panic if it drops further. If it comes down into here, maybe even breaks that, it will come long again. And if it does that, then you can maybe load up a little bit down here. But remember, do it within a balanced portfolio, guys. Ethereum, same thing, guys. It will go long again. Is there more downside to it? Do you wait till it gets to there to buy in? Or like with Bitcoin, if this is the one you decide to trade, do you get in there, in there, in there, and a little bit in there with a total of whatever percentage you decide to allocate? 2, 3%, 4%, maybe 5%. You're not telling me 10, 15, 20, or 30% of your account. There are a lot of people, if you go and look at eToro or whatever platform you're on, if it's a social platform, there are a lot of people with, 66% for the year, 200% for the year, guys. They've been trading cryptocurrencies, and that's how they've pulled that off. But if you go and you look at their annual drawdown, you'll see, 56% annual drawdown, 62%, maybe 40%. You don't really want that. It's gambling, guys. It's gambling. And yes, it's paid off this year and last year. Will it pay off again next year? Well, we don't know that. But the problem is that if it hadn't paid off, then you're looking at 67, 56, 40% drawdown in a year. And then you gamble it again next year in the hope that you'll get the 200. If you get it wrong, guys, you're just blowing your account. And if your account is like mine, hard won, you certainly don't want to be blowing it on a gamble. So if you want to get into cryptocurrency, take a small proportion of your account, allocate it to it, and it's like a little sweet or a little cherry on the top. It's a Brucey bonus. That will not mean a lot to a lot of people. I don't want to explain it. It was a UK TV program, game show from years ago. Okay, let's get on with it. US oil, we've already discussed it. I think it'll continue to go up. Euro CAD. Let's get out of the daily, guys. We're a little bit too far out there. Euro CAD, looking for it to drop. It started to drop. I was wondering if there's going to be a bit more upside to it the other day. There could still be, guys, but yet again, if you were, listen, that's not a place I would get involved in something. And to be honest, this hasn't been nice as far as the setup's concerned. But if you take this structure as a whole, now it concerns me a little bit because it looks like a running flat. But I don't think that's going to happen. If the oil price goes up, this will drop, guys. It'll continue to drop. I don't see a setup on it at the moment. Euro Oz, a little bit the same, drifting and drifting. We did call it short from up here. Then a pullback, pretty sharp pullback, but now we're on the way down again. Would not be surprised if we saw the other side of that down into there. Maybe it only comes to there, but it could well break it. So potentially a trade short in there. Euro New Zealand. I would say probably the same thing. You can see there we were looking for it. A bit more downside to that. Not convinced by that though. Euro yen. Well, I think this is going to continue to go long, guys. But what we're looking for here is some sort of correction to try and trade it up. Euro Swiss. Now, see, back to this euro yen. I've drawn that. I'll not be trying to trade that, guys. There are better trades. This is potentially a better trade if you can get an in, if you can find a setup, which I can't at the moment. But there are people that trade breakouts. In other words, there's a double top. If it breaks that top, they would get into it. It's not a strategy I'm not saying I haven't tried it before. I have, but so often you get a break at the top and then you get a pullback, guys. And if it turns out to be a C wave, that was a 4 and a 5, and then this turns out, and I know that doesn't look like a 5, it looks like an ABC, but if that turned out to be an A and a B, you could well get a C to break that before it goes. Therefore, I don't trade that. But if it turned out that you had a pullback like that, or a breakout and a pullback like that, then for me, then you're looking at this maybe a 1, a 2, and off you go. Start of a third wave. So that's the reason that I don't get involved there, because there is always a possibility of a C wave when you get a double top. Now, there's lots of examples where you get double tops that doesn't happen, but I prefer to be, for example, this top got broken. There was a pullback in it, but the top did get broken. Zigzag down. If you got into there, or if you had an alarm there and as that broke out, you got involved there, then that's fair enough. You ride through it. Probably in this situation, if you got in there, you would have been stopped out before it broke. But as this turned out, it wasn't a great time to try and trade. And you're going to have to get used to that, getting stopped out for zeros or for depending how tight you put your stop loss, but certainly for a zero, you're going to get lots of zeros, guys. Okay, I'm not going to that now. I always find myself teaching in these things. I'm really just supposed to do analysis. Euro Swiss. Yeah, we're on Euro Swiss, weren't we? Now, the Swiss is heavily influenced by the gold price, folks. So if the gold price starts to go long, then the Swiss will continue to strengthen. But for me, just looking at that structure, the best trade for this would be long, but the fundamentals for me at the minute don't make me excited about trying to trade it. In other words, if you see something like that, you're either looking for a pullback before it goes again, or you're looking for it to finish and to start coming back long again. But the fundamentals aren't there for the minute, and therefore I'll not give us an analysis of that. We'll leave that alone. Pound CAD. Now that pound came a lot higher than I expected it to. There is a break there. Is this break a bit of a zigzag before it goes long again? I don't think so, guys. I don't think so. I'd be looking to maybe trade that down. But I'll wait until I get an angle on the pound. You can see there again. I was looking for this to drop. It's because this pushed on so much further, and even against the dollar, because that was so strong, it's kind of made me doubt my analysis of a few weeks ago when I was expecting this to drop. It could well still drop, guys, but for now I would just leave it alone, unless you have a better idea than I have of it. But just the information that's in my brain at the minute, I'm leaving it alone. And pound New Zealand, I'll do it again. I'll put the alarm in there with the thought that it could well drop, but I'll look into it more as the week goes on. Pound Swiss, same thing. We were looking for that to drop. Running out of steam, guys. It could well be a trade short in there. Pound Euro. I don't want to trade the euro long. There could be a little bit of long in the euro as if DXY corrects a little bit more, but I don't see the reason for it. I don't see the fundamental reason for it. So I'd prefer to wait for a setup to trade the euro short, particularly against, say, the likes of the dollar, guys. I would like to try and trade that. So, pound yen. There's possibly more upside to this, but yet again, I'd wait for some sort of correction. See how that, although it's dropping off, it's not anywhere as steep as there. Are we looking at the same thing here? Let's get our dates. What date's that? It's November the 8th. December the 3rd. November the 8th. November the 8th. Was that the oil price dropping? Where's November the 8th here? November the 8th, look. And then look what happened to the pound CAD from November the 8th. So it shows you the influence that the oil price has on the CAD, guys. Okay, that wasn't what I was initially looking for. I was looking to see, where's that? It's December. There's December. November the 8th. So that move on the CAD was mainly initiated by the drop in the oil price rather than any strength in the pound, guys. And then the bit that continued on up was the strength in the pound. And then if you go and look for that same move over here, it's reflected in that. Just look, it's reflected in that. And the difference between those two, in other words, with there is a point I'm trying to make here, guys. Stick with me. With the Aussie, we had that and then this shallow. With the New Zealand, we had that and then it pulled back stronger. So for anyone who's been listening for any length of time, you'll understand what I'm about to point out here. If you go to the Aussie New Zealand, having looked at those two charts, Aussie New Zealand should have gone long. There you go. Right. Aussie yen continue to go long. I think it will continue to go long. We were looking for it to go long back and down here. Need to start drawing charts, guys. I've been saying it all year. Need to get back into drawing charts so we can see. Look at that. It's dropping off, but it's shallow. You could well get a bit of a pullback here and then the next leg up. Aussie New Zealand. Let's clean this up. I would say it's going to continue long. But yet again, it's how do you get into it? Now, I didn't get into this the other day, guys. And we take it down into, say, the 1 hour time scale. As we were coming up here, I said, guys, this is going to continue to run like this. So anytime it drops, it's a time to get into it, if you want to get into it. It's not going to give you great returns, but if you're patient, slowly but surely it will. And I think it will continue like that. What we have to be aware of at this point is where it's broken through there. And this sort of structure often continues. You know, you'll get a drawback and then it will go again. So anytime from here, I wouldn't like to continue to try and trade that. I'd prefer to see a bit of a drawdown on it. The difficulty is you're going on a fundamental basis. Why would you get that? May not get it, and it might just continue to do that and then break out and go long. But that's what I'm expecting it to do. And why is that? Well, I've been watching this chart for years, guys. And every now and again, it does what you expect it to do. Let's get into the daily. And what I said back here was that it had come down into this average here. That was probably the March 20. So that's an anomaly. You can take that out. What did we say here? This is why I need to do these. Oh, it's just a summary. And way back over there, I can't remember why that dropped so much, but there would have been an anomaly back there, guys. But on average, anytime it comes down into this sort of area, it turns and goes. So back here, it dropped into there, and I said, listen, starting to think about this moving back in that direction. Obviously, the top's a little bit harder to predict, but it's the middle bit you really want to be trading, guys. It's not the first wave you want to be trading. It's the third wave. And then the fifth wave becomes a little bit, in an impulse. The fifth wave becomes a little bit less unsure. And the first wave, you're trying to think, is this a breakout? You get your second wave, you break out of your second wave. That's where most of your money's made. And this is what we're in at the minute, guys. For me, we're in a third wave. So within that third wave, we've had a 1-2. It's petering out. It could well give us a fourth wave, a fifth, and then something. Then it'll get up to there, and then it'll be time for it to come back down again. But we could be into the middle of the year by then. Now, it's speculation at the minute, but speculation based on what this currency pair does over time, and the fact that the Australian Bank is the Reserve Bank of Australia is increasing interest rates, guys. Aussie Swiss, and there's still tourist problems for New Zealand at the moment as well, folks, which is quite a big part of their economy. Aussie Swiss, yeah, not completely convinced by that. We were looking for a little pullback. We got this. It's a nice setup to go long. But you better just hope the gold price doesn't go long, or that will not come off. Aussie CAD. Now this is a pair that I don't trade, guys. I can't really get a handle on it, and I don't have the time to start looking for one. They're both commodity-based currencies, and therefore commodities tend to all move in the same direction. And so from a snap look at something, which is kind of what I do, I don't have an angle in this. Is it a running flat before it breaks and goes short? Possibly, but if we're looking for the oil price to go up, then I wouldn't want to trade that, so I'll just leave it alone. Now, this is one that, I should have got into, guys. I was looking to get into it. We talked a lot about it back over here. But because of that structure, I was kind of a little wary that you could get another leg down there back into this, before it goes. So I waited too long and it broke out. When it broke out there, I kind of thought, oh, we're not going to get that. So it's pushed on up. It's broken that. I was kind of hoping maybe you got a push back off that double top and then it goes, but it didn't. It's pushed on up, guys. It's now not at a position where I wouldn't particularly want to get involved in it unless it comes back down again. But it is one that we did predict, but just didn't get the setup for it. If we look at this out in the daily time scale, see there's the trend we've been trading. But each time it comes up, now it doesn't have to stop there because there's a line there, guys. That just indicates, gives us an idea of what's going on here. So you wouldn't be surprised if it came off. I don't fundamentally know why that would happen. But if it did happen, then that would be a good place to start thinking about trading it long. Can it push on up here? It can, because it could become impulsive. If this is an impulsive move, then, you could be looking at something like that. Let's take it out in case that's absolute nonsense. Obviously, you've got to get it in context. It's not necessarily nonsense. We've been here before. That could potentially be a target. But having said all of that, if you get back down into the 1 hour time scale, would I jump in there? No, I wouldn't. That's an impulse, guys. It'll eventually give us a correction. If it gives us a correction, whether it's flat or whether it's a zigzag, that would be the place to start thinking about getting involved in it. If you're already in it from down here somewhere, then just be trailing your stops, guys, because at some point it will correct. But it doesn't have to correct here. It could continue on up for quite a bit yet, guys. But I would certainly be trailing the stop and waiting for that correction. CAD Swiss. My old pal CAD Swiss. There's what we drew way back. It seems to be what's happening. If oil price continues, you could well see that continuing to push on up. But if we could get a setup on it, I'd prefer the CAD yen, guys. Having said that, it's maybe gone a little bit too far, but you can see where we were. We had this and we were looking for it to break out and go long. We actually have 2 alarms on here, guys. Let's just take that alarm off there. Don't need it anymore. And then with this alarm that we put in the other day, we'll just move it up to there. So yet again, if you did get a nice setup in this and a pullback, then trade it up. That would be your target, and it possibly could go further. But you'd want to be in it here somewhere so you can get your stop to zero, trail it a little bit in case it comes off there, and then at least you've made a bit of profit. So yes, possibly long there. New Zealand yen. Yep, it's continuing to push on up. As expected, I'll just put another alarm line in there. I don't see that as a setup, guys. Maybe you can see that's falling off there as this moves up. So eventually you'll get a pullback. Maybe that's your chance to get into it. New Zealand CAD. Just like the that's the CAD strengthening up as the oil price strengthens up, guys. But just like with the Aussie CAD, I don't trade this. New Zealand CAD. So if I don't trade it, while I look at it, just gives you a bigger overall picture, guys. New Zealand Swiss, pulling back at the minute. possibly looking like a nice setup to go long. Let's have a look at gold. I'd just be a little bit wary of that one, guys, because I'm not entirely sure what's happening with the Swiss. But from a technical point of view, if we go out a little bit further, that kind of disappointed a little bit. I mean, it's a daily time scale, guys, so it is a massive move, but I would have expected a bit more upside to this. If you take the whole thing and you know, if you're looking at this and you're saying it's possibly the reverse of that, then that's your trend. It's just playing with this, guys, at the minute. I'm not this isn't nailed on. But if we reverse the trend here, then there could well be, you know, something like that on the cards. And then, you know, you somehow you have a channel here. So that kind of put a spanner in the works. But you know, you get it. Look at this. Look at how that, you know, that was the trend there. But look how it came way back up there before it dropped again. I suspect there's probably more upside to this, guys, but not right now. Let's have another think about that. Okay, guys, that'll do for today. As I say, I'll not necessarily do these every day, but you will know when I've done them, because either through YouTube, hit the wee alarm bell and it'll come up, or if you follow me on Telegram, I'll put the link out every time I put a video up. Okay, guys, that'll do for today. Bye for now.